This is Craig Haugard with your Financial Issues Ag Update. Well, China's government is reportedly urging both private and state-run traders to buy corn, soybeans, and oil in the near term as they fear another global wave of the coronavirus and the ability of the global supply chains to handle it. Corn traded higher yesterday on a round of short covering and spillover strength from the crude oil market. Gains were limited by the rapid planting progress and the prospect of a big crop. After the close, the crop progress report showed that the rapid planting pace has continued, with 80% of the crop now planted nationwide and 43% of that crop emerged. Both numbers are running well ahead of the 5-year average pace. In the overnight trade, we have spot corn futures trading a half-cent higher as I record this. Soybeans traded higher as they were propelled by strength in the soybean oil market, as well as optimism that China will be in the market for more U.S. beans. The planting pace continues to run well ahead of normal, with 53% of the bean crop now in the ground versus the 5-year average of 38%. 18% of the crop has emerged. In the overnight trade, spot soybean futures are trading a penny lower. The wheat market was weaker on plentiful supplies and weak demand for U.S. wheat. Minneapolis dropped less than the other two markets as they were somewhat supported by concerns over delayed spring wheat planting. Kansas City, on the other hand, saw additional pressure from beneficial rains in hard red winter wheat country over the weekend. The condition of the winter wheat crop slipped by 1% to stand at 52% good to excellent in yesterday's report. The spring wheat crop continues to run well behind the historic pace, with 60% of it now planted versus the 5-year average of 80%. 30% of spring wheat has emerged, which again trails the average of 46%. In the overnight trade, we're kind of seeing a continuation of yesterday's pattern. We have Chicago unchanged, Kansas City is 2 cents lower, and Minneapolis is trading 2 cents higher as I record this. Cotton lost some ground, with July futures losing 45 points to settle at 57.80. The crop planting progress report shows that 44% of the cotton crop has now been planted. In the overnight trade, we have spot futures trading 27 points higher. Livestock futures were mixed. The August live cattle futures finished the day $1, 2.5 cents higher, while August feeder cattle finished the session up $1.47.5. Lean hog futures were a bit weaker in the front months, with the June futures 22.5 cents lower at the close, and the more deferred months all stronger in the lean hog futures. Class 3 milk futures took a breather from their recent run-up, with the June futures closing down 19 points to settle at 16.66. We're trading an additional 2 points lower in the overnight trade. And meat cutout values broke to the downside yesterday. Choice boxed beef was $19.37 lower as they closed at $414.95 per hundredweight. Select boxes were $24.19 lower at $394.87. And pork carcass cutout values broke back yesterday as well, finishing $2.66 lower as they closed at $107.46 per hundredweight. Well, this has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.